This is Horizons Middle East and Africa. Our top stories this morning. Rally cracks, Asian stocks and U.S. futures under pressure after Nvidia leads a Wall Street tech sell-off. European leaders are said to be planning to send British and French troops to Ukraine under a potential peace agreement, looking to leverage President Trump's backing for security guarantees. And doubling down, U.S. Treasury Secretary Scott Bessent ramping up attacks on India, accusing the country of profiteering off Russian oil, saying the main beneficiaries of some of India's richest families. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi. And the summer rally that we have been seeing, at least with tech stocks in the Mag 7, taking a bit of a halt on Tuesday. And it's looking like that negative day that we did see on Tuesday, potentially extending into Wednesday, especially if you take a look at U.S. equity futures. Now, what we see from NASDAQ futures right now down just over 0.5%. That actually coming after what was a relatively mixed day on Tuesday, but the NASDAQ actually ending the day down 1.5%. Its second worst drop since April's tariff shock. And that was really, as we mentioned at the top of the show, led by a rout in Nvidia. And we're seeing that negativity extending into Asia trade. The MSCI Asia Pacific Index also down more than 1% there. Now, we should know investors are squarely focused on that marquee event of the week, which is coming on Friday from Fed Chair Jerome Powell at the Jackson Hole event. But before that, we will also get July minutes from the Fed that is coming later today. And also many investors paying close attention to some earnings that we've been waiting for from major retail names in the U.S. That also coming later today. Brent crude, though, showing a bit of strength this morning, trading at about $65.88 a barrel there. And Bitcoin largely flat right now. But what's been really interesting to monitor with cryptocurrencies is just taking a look at the strong pullback that we've seen from the recent highs, especially when it comes to Bitcoin. It's hard to forget that it was just over $124,000 just a few days ago, now trading at about $113,000. We're also seeing the slide pulling other cryptocurrencies down. And I just want to flip the board and show you our terminal chart for the day. Investors also closely monitoring another event that is coming today, and that is Google's Made in Google showcase later today. We've been talking quite a bit about the AI trade that's been happening. This event is mainly focused in on the new hardware that will come from Google and potentially AI-driven products. And the question will be whether or not unveiling some of these new products will continue to make analysts bullish on Google right now. But this is a look at the chart right now, just ahead of that event for Alphabet later today. Now, let's stick with the markets. The sharp sell-off in U.S. heavyweight tech shares has rippled through markets on growing concern that the rally since April has advanced too far and too quickly. Let's bring in our executive editor for Asia Markets. That's Paul Dobson. Paul, thanks so much for joining us. So what would you say was the impetus for some of this pullback right now? Was the current rally just overstretched? Was this just inevitable?
Good morning, Jennifer. So I definitely think that there is some element of that the idea that the market had gone too far too fast. But I wouldn't see this as negatively, as a particularly negative event necessarily. And the reason that I say that is because it seems like, this is the idea that people are taking some of the money out of the tech stocks but putting it back into the rest of the market. So if you look at the S&P 500 in the US yesterday, for example, we saw 350 of the 500 companies rising, only 150 lower. The ones that were falling were the ones those tech companies that have been leading the advance so far. And, there's been quite a lot of concern in recent days about the valuation of those companies, about the dominance of them and their increasing concentration of the index in those names. And so therefore, perhaps it was to be expected that we would see a pullback at some point. People obviously focus on Nvidia, the biggest of the bunch, but also on Palantir, which is still up more than 100%. year to date, even though it's now on a 5th day of sell-off and kind of one of those companies that is seeing the sharpest pullback after a really big rally. So I think in terms of catalysts, really, we've had some better earnings and some optimistic outlook from some of the other names in the index. So that's one reason. And then we do have this big risk event at the end of the week. Will Fed Chair Jay Powell indicate that the Fed is starting to get ready to cut interest rates, which would be positive for markets, or is he going to dig in his heels and say, no, not yet? That's probably the risk scenario that markets are looking to price in a little bit right now.
And Paul, in terms of some of the other movers that we did see, one stock that actually bucked that trend on Wall Street was actually Intel, which is surprising considering recent headlines. Do you think the Intel bulls are finally being awarded for some of their patience with the company?
Yes and no. I mean, right, but for the wrong reasons. Maybe it's what we're seeing is SoftBank has picked up a stake in Intel, and that's obviously buoying it. And then this interest as well from the U.S. government in assuming some sort of a position in the company too. And you could probably take that either way. Yes, the stock has been taking a bit of a lift recently. Yes, if the government shows a little bit more interest, you could expect, all things being equal, that it would help some of the troubled projects that Intel has to really kind of see their way through. But also, I would have qualms maybe as a private investor investing like in the companies where the government is taking an active stake. What does that do over the long-term outlook when you have that sort of an interventionist approach? Is it going to be long-term better for the company, or is it going to be a net negative in the long term? That's one of the things that those investors are going to have to think about. And now for Intel, just like we've had with all of the others that we've been talking about, you again have very stretched valuations, and people are also going to have to start taking that into account.
Yeah, so that narrative is still existing there despite the strength. Executive Editor for Asian Markets, Paul Dobson. Paul, thanks so much for starting us off. Now, for more on the market action, joining us now is Satyajit Singh, Head of Fixed Income Strategy at Emirates NBD. Satyajit, thanks so much for joining us. So Paul was just mentioning there the big risk event coming later this week from Jerome Powell. Is that what you are squarely focused on right now? What's your sentiment right now, just considering a lot of overlapping events?
Absolutely. I think that is the biggest risk event for the fixed income markets this week. I mean, honestly, long-end yields have long left their dependence on the short-end rates, which Fed controls. Long-end yields are more focused on growth, inflation, and U.S. debt sustainability dynamics. However, short-end rates, which have come down significantly in the past couple of weeks, I would say they are under pressure. I mean, if Fed chair hedges his bets and says that he will depend and have a look at how the August data comes out before the next FOMC meeting, then probably we would see a little bit of uptick in the short-end rates, and that's not great for the short-end bonds, I would say.
But there's a lot of investors squarely think that in September we will end up seeing a cut. As a fixed income investor, are you focused on September, or are you focused on what comes thereafter?
Honestly, we are focused more on the longer term, because even with a September rate cut, I don't think that we would see the 10-year yield go below 4% anytime soon. For us, 4% and 4.8% are the key levels to monitor for 10-year yields. And honestly, as I mentioned, 10-year yields have detached from the way the short-end rates are moving. So we are more focused on how the longer-term picture evolves in terms of inflation, in terms of growth dynamics, and of course, what U.S. does to achieve a sustainable debt levels. These are the main questions that the fixed income investors have at the back of their minds.
Do you still remain on the sidelines then when it comes to U.S. bonds?
Not really. I mean, U.S. is the largest bond market in the whole world. You, as a fixed income investor, you cannot remain on the sides. In fact, if you look at our asset allocation, we have an overweight on the treasuries market as such, mostly to hedge ourselves against pullbacks in the other asset classes, including an overweight in gold as such. So yes, it's difficult to be overweight, but what we play with is mainly duration. So currently we are short duration, so we like treasuries somewhere in the 5 to 7 year kind of range, rather than liking 10-year plus kind of treasuries. That's how we move our positions.
What is your focus then, Satyajit, when it comes to Jerome Powell on Friday? He's facing pressure on all fronts, including from the U.S. president. What are some of the signs potentially that you're going to be looking for in his statement?
Honestly, I'd hate to be in Chairman Powell's shoes right now. Fed is working a very thin line, and add to that President Trump's pressure. Honestly, I think Chairman Powell will maintain his hawkish stance. That's my personal opinion. And I do think that some of the investors who are looking for hints of a rate cut in September directly coming from Chairman Powell at this Friday's meeting, I think they might be disappointed a little bit.
Let's take a look outside of the U.S. Where are you seeing opportunities? You talked about hedging. Are there other markets? Are there other IG bonds that you're looking at potentially in the interim?
Outside the developed markets, I mean, emerging markets actually present an immense opportunity for investors, right? Look at Indian high yield. Most of the companies in that space, they do not export outside. They actually depend on India's domestic demand. So that's a great place to invest in. Look at GCC. GCC has been very, very resilient. And in fact, our issuance has crossed $75 billion YTD. And the spreads have been very, very resilient, to be honest. So GCC high yield, the subordinated debt of the GCC banks, some of the real estate names from the region, they give attractive yields. I think these are the major opportunities outside developed market. Now, if we come to developed markets, I think we should diversify away from US Treasuries, and we should definitely look at UK gilts. Again, I'm telling you about the moderate duration UK gilts, not the very long duration, and similarly some Euro govies. So you could have FX plays there, and probably we would see in UK yields go down slightly because, the job market there isn't holding up.
And you said gold, again, is another opportunity for you right now?
We do have slight overweight in gold because we think that whatever has happened this year, gold has acted as a better hedge during pullbacks rather than US Treasuries. So definitely, I would recommend that clients should have a little bit of gold in their portfolios as part of asset allocation, regardless of the valuation at current levels.
Yeah, I was just taking a look at that right there. Satyajit Singh, head of fixed income strategy at Emirates NBD. Satyajit, great to get your insights on. Thank you so much for joining us. Now, coming up, European leaders are offering troops as a Ukraine security package takes shape ahead of a potential Putin-Zelensky meeting. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. A package of security guarantees for Ukraine will take shape as soon as this week, with European leaders offering troops as part of a potential peace deal. European leaders are looking to leverage Donald Trump's offer and place Kyiv in a stronger position ahead of a possible meeting between Presidents Vladimir Putin and Volodymyr Zelensky. Let's now bring in Bloomberg's Balazs Pens. Balazs, you've been following the story quite closely. Talk to us about the contours of a potential security guarantee that is being discussed within these leaders.
Yes, Jennifer, it looks like European leaders are rushing to take advantage, to seize the moment and the momentum created by getting the backing of Donald Trump during the White House meeting. And it looks like they're trying to set up a robust security framework that could help enforce any sort of peace agreement emerging from this process, and something that could deter Russia in the future, which has been one of the main concerns of the Ukrainian side as they prepare for these meetings. The details that are emerging looks like some European countries would be contributing troops, soldiers, as we heard earlier. It looks like British or French soldiers could be involved. Maybe as many as 10 European countries could be involved in such a force. And the U.S. would also help with things like intelligence, potentially border surveillance. And Donald Trump has even mentioned the potential for U.S. air support for any kind of security framework. So it does look like the basic elements of a plan are coming together. There's obviously a lot more work to do. Some of the European countries might need to work internally to work out how far they can go, who's going to provide weapons, and who's going to take exactly what sort of role. But the European side of this process of creating the security structure before the peace process can continue does look like it's coming together.
Well, and you mentioned the potential to deter Russia in the future. That leads me to ask what the status then is of a proposed meeting between Putin and Zelensky then.
That is the big question right now. We heard earlier from the German Chancellor that he was hopeful that a meeting might happen as soon as within the next 2 weeks. But right now, we don't have a date for the meeting. We don't have a venue for the meeting. A few cities like Budapest or somewhere in Switzerland have been floated, but there's no agreement on that. And it does seem like even that will be a sticking point. And that's the easiest question going into that meeting. The two sides are very far from each other when we talk about how they can agree on things like territorial exchanges, about prisoner exchanges, about their future coexistence along this border after what's almost been 4 years of war. So we are pretty far from seeing even the contours of an agreement there. And the meeting, everybody's hopeful that this will happen sometimes relatively soon. The U.S. president is certainly pushing for it. And now what that has done is that has put the ball in Putin's court. We're waiting for his agreement to a meeting. And that's when we can start setting a date and finding out where it might take place.
Bloomberg's Balazs Pens joining us there in Hong Kong with the latest. Balazs, thanks so much for your reporting. Appreciate it. Now, here's a look at some of the other stories we are following this morning. Syrian state media is reporting the country's foreign minister, Assad al-Shabani, has met with an Israeli delegation in Paris. The two sides reportedly held U.S.-mediated talks focusing on stabilizing the situation in southern Syria. Talks also tackled de-escalating tensions as well as stopping intervention in Syria's domestic affairs. And Israeli Prime Minister Benjamin Netanyahu has accused Australian Prime Minister Anthony Albanese of betrayal for planning to recognize a Palestinian state. Tensions have escalated further after Canberra canceled the visa of a member of Israel's far-right religious Zionism party who was scheduled to speak in Australia. Israel, in turn, revoked visas for Australian diplomats in the Palestinian territories. Australia will join France, the UK, and Canada in recognizing a Palestinian state at next month's United Nations Summit. Coming up, we turn to the Africa region as the IMF heads to Senegal to discuss its fiscal situation. We get the details of what investors will be watching for next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. An IMF mission is heading to Senegal to discuss concrete steps to address recent data issues and present a case of misrepresentation to the executive board. Investors are watching to see if President Faye's administration will get closer to securing new funding needed to stabilize its strained public finances. For more, let's bring in Bloomberg's Ndira Oganga, who is following the story in Kigali. Ndira, what kind of clarity is the IMF seeking from this review and from this trip?
Good morning, Jen. The biggest question is, how does $7 billion in debt go undetected for nearly 5 years without nobody ever knowing? How is it that they were reporting their numbers to international organizations, the IMF included, because they had an IMF program? But this was under the radar, and it's because the government had two accounts at Treasury, and while they reported one, another that had debt went unreported for such a long time. And as a result, you have this whole of $7 billion that nobody can actually account for. And from the further audits that have been done by this new administration, it shows that this amount could be bigger than what is being reported as $7 billion. And this has had a big impact on the economy. We have seen debt to GDP balloon cross the 100% mark. We've seen budget deficit also increase. And now the government is just looking at all factors that had led them to this point and trying to see how was this fabricated for such a long time without nobody ever taking note. And as a result, this has caused a lot of anxiety surrounding Senegal's outlook. We're seeing their bonds taking a hit. 2031, 2033 notes have been impacted negatively. And that's why during this trip, IMF will be seeking guarantees that this will not happen again. And while you cannot say that for certainty, there are certain measures that they would like to see the government put in place. For example, do away with paperwork, take everything online so that there's a trail to follow, also promote accountability and also control and governance in this new administration. There'll also be a few conditionalities. They want this government to bring their budget deficit down, reduce debt to GDP by have to bring it to 50%, which is manageable. But currently, they will also be looking to either waiver their debt. They have already disbursed $700 million under the $1.8 billion program that they have, but that will depend on how the conversations go.
Yeah, and there is quite a bit of focus on those conversations. But when we think about where Senegal is right now economically, they can't really afford any more delays in terms of stabilizing their finances, can they?
Jennifer, they actually cannot, because what an IMF program does is the buffer, and it's what stands between solvency and liquidity. This is a country that needs to raise money, and it needs to raise money fast to a tune of $10 billion. And this is not money that the government can actually raise domestically. They'll have to go out and look for this money. But without an IMF program, the international partners are a little bit hesitant to give them money because they are not guaranteed that the affairs of the country are actually in order. And so they might have to look for other places. They might have to strike a deal with Middle Eastern countries. They might have to maybe raise sukuk bonds. The president of Senegal is currently in Japan. He might want to look for finances there, but also locally is an option that they're seriously considering. And they'll be doing this through two measures, through taxes and austerity. In terms of taxes, they're looking to renegotiate the oil and gas contracts. They're looking at royalties, import tax, and also taxes on SMEs, which might not necessarily be received well. In terms of austerity, the IMF has been very clear: do away with subsidies, particularly on fuel and power. And that's something that they might consider doing, only leaving subsidies for key sectors, but this is not going to be received well. This is an administration that campaigned and came onto power saying that there are so many reforms they'd like to do: bring the cost of living down, promote transparency, ensure that our oil and gas projects go live, but that has not necessarily happened. And so they are caught between a rock and a hard place. They're newbies in government. They do not necessarily know how to govern, but they also inherited dilapidated coffers and a government that did not have its finances in order.
We'll leave it there. Bloomberg's Ndira Oganga in Kigali for us. Ndira, thanks so much for that update on Senegal there. And coming up, President Trump urging Putin and Zelensky to show some flexibility as he encourages the two leaders to hold a bilateral summit. More on that next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Rally cracks. Asian stocks and U.S. futures under pressure after Nvidia leads a Wall Street tech sell-off. European leaders are said to be planning to send British and French troops to Ukraine under a potential peace agreement, looking to leverage President Trump's backing for security guarantees. And doubling down, U.S. Treasury Secretary Scott Bessent ramping up attacks on India, accusing the country of profiteering off Russian oil, saying the main beneficiaries are some of India's richest families. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasanja in for Jumana Bersechi. And as we were mentioning there, we are seeing a risk-off mood take shape with the markets on this Wednesday. A lot of that being a carryover from what we saw on Tuesday, and it's seeming like the stock rally that we've been seeing over the past few weeks and months taking a bit of a pause, at least when it comes to tech right now. NASDAQ futures looking to start the day a bit weaker, down just over 0.4% there, and continue continuing what's been a down day for Asia. And the NASDAQ actually still looking weaker after closing on Tuesday, down 1.5%. It was its second worst drop since April's tariff shock. And a lot of that, as we were speaking to our colleague Paul Dobson about, was led by a rout in Nvidia. And as we mentioned, tech heavyweights really falling across the board, continuing what we were seeing earlier in the day in Asia. The MSCI Asia Pacific Index down now just over 0.9% there. And we've been talking about this marquee event that is coming later this week from Jackson Hole, and that is the speech from Fed Chair Jerome Powell, potentially giving investors some indication of where the Fed is heading to next. Before that, though, we are paying close attention to the Fed minutes from July that we will get later in the day today, and also some notable earnings from U.S. retail heavyweights also coming today, potentially giving us some insight into where the consumer is in the U.S. Brent crude up just marginally right now, trading at about $65.90 a barrel there. And we also have Bitcoin on the board, looking relatively flat right now. But still, the pullback that we have seen from Bitcoin over the past few days, if you remember just a few days ago, it was trading just over $124,000 right now, looking right now at about 113,649 there. And we're also seeing other subsequent cryptocurrencies also being dragged down around Bitcoin. And let's just flip the board and bring you our terminal chart of the day. And the focus today, for some investors at least, is Google's Made in Google Showcase that is coming later today. You may be asking why, and the focus really is on a number of new hardware products and potentially some AI-driven products that could potentially give investors that have made Google and Alphabet a buy even more bullish on this stock. And so the question will be, will it be enough to bolster shares even more so? But that is our terminal chart for the day for you. Now, let's turn back, though, to geopolitics and bring you Indian Prime Minister Narendra Modi. He's welcomed improving ties with China, attributing the progress to a shared respect for each other's interests. New Delhi has been recalibrating its foreign policy toward Beijing after threats of higher tariffs from the U.S. over its Russian oil purchases. Treasury Secretary Scott Bessent even accusing India of profiteering from it.
They're doing what I call the Indian arbitrage. They're buying cheap Russian oil, selling petrochemicals back out. Much of that is going to the richest families in India. We already have very high tariffs on China, and now India is going to see what it feels like.
For more, Chief North Asia correspondent Stephen Engel is joining us. So, Stephen, walk us through what else we heard from Scott Bessent, really intensifying some of the criticism from the U.S. administration to these countries.
Yeah, and sort of justifying why the Trump administration is adding that extra 25% tariff on India, in addition to the reciprocal tariff of 25%, an additional 25% for the buying of Russian oil, something that the New Delhi government is essentially saying they're in their right to buy the cheapest oil on the global markets. But again, it goes back to what is happening at the background, and that is China and India growing closer. Also, Modi growing closer with Moscow, calling Putin his friend. We'll talk about that in just a little bit. But essentially, you know, the logical question would be, why isn't China slapped that additional 25% tariff? They're buying more oil from Russia than India is. Bessent essentially, though, threw out some numbers saying before Russia's invasion of Ukraine in 2022, India bought about 1% of their oil from Russia. Now he says it's 42%. So clearly it has ramped up considerably. And then they take that oil, that crude, and sell it on the market to the tune of $16 billion. That's why they're targeting India. Whereas he says with China, essentially the numbers have stayed fairly similar. Pre-invasion of Ukraine, about 13% of China's oil came from Russia. Now it's 16%. But essentially, they've proven to Scott Bessent, at least, and the Trump administration, that China has diversified its sources of imported oil.
And Stephen, you were alluding to this, but of course we did see Wang Yi meeting Modi, and we did see some positivity, at least seemingly, coming from this meeting. What would you say, based on where you sit?
Yeah, I think this is a logical progression from the last SCO, which is the Shanghai Cooperative Organization. They're going to be meeting at the end of this month in Tianjin, China. Modi has confirmed, the Chinese have confirmed that Modi will go there. First time in 7 years that Modi goes to China. He will be meeting again with Xi Jinping. But at the last SCO in Kazan, Russia, in October of last year, those two gentlemen did meet, Modi and Xi Jinping, building on their friendship. That was before the election of Donald Trump, but they could see the storm clouds, if you will, of protectionism. So they are simply through BRICS, through the SCO, and as the two largest, most populated countries in the world are seeing, even though there are border disputes 5 years ago and some other differences, they're finding some common ground in the face of these Trump tariffs, especially India getting that. Well, essentially China, of course, has a prolonged truce with the United States right now.
Yeah, significant developments there. Stephen Engel, our chief North Asia correspondent. Stephen, thank you so much for joining us and for that reporting. Now let's stick with geopolitics. After meeting separately with President Trump, Vladimir Putin and Volodymyr Zelensky could be headed toward a pivotal face-to-face summit. Trump is urging both leaders to show some flexibility. U.S. Special Envoy Steve Witkoff gave this view on the progress towards peace.
It's our job to bring the parties together, to narrow the issues, and that's what President Trump does better than anybody. He's got a real sense. I mean, he's got a real sense of what it's going to take for Ukraine to meet in the middle and to move the Russians.
For more, we're now joined by Julia Roknifard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, thank you so much for joining us. I want to just start here because just a few days ago on Friday, after the Alaska summit, we heard from analysts saying that Putin had scored a win. And I wonder if we take a look at the events over the past few days this week, has that been undone? Are you seeing some progress towards potential peace in this meeting between Putin and Zelensky?
That's right. Putin indeed has squared a win, as they say, after this Alaska meeting. I don't think it has been undone by the meeting between Donald Trump, Vladimir Zelensky, and the European leaders supporting Ukraine. Yes, there is probably space or reason for concern for Vladimir Putin, that what was decided during that meeting. But even in the middle of the meeting, Donald Trump was calling Vladimir Putin to update him on what's going on. So clearly, it looks like Moscow has got an upper hand in the conflict. Putin has gotten Trump to practically repeat his own words about that there's not going to be a temporary ceasefire until there is a wholesale deal reached. So Trump has been repeating it word by word, and I don't see that changing. So now it comes to Donald Trump possibly rendering pressure on Vladimir Zelensky and the European leaders in trying to reach some sort of the deal. But if Putin is unhappy with what comes out of there, then Russia is just simply going to keep fighting. Because, as I said, it's got an upper hand, and it has been like this in the battlefield. Now we can say in diplomacy as well, because of his latest travel to Alaska.
What are the obstacles to getting this meeting between Putin and Zelensky to happen?
There needs to be a preparation done. The meeting between Putin and Trump was quite hastily planned, and it looks like Trump indeed walked into it without proper preparation. So there were contours of something discussed, and I presume there were issues discussed beyond Ukraine, which also plays into Russia's gate in terms of trying to water down the issue of Ukraine with a broader sort of context of cooperation between Russia and the United States. So now, indeed, there needs to be a preparation taking place where they can align positions of the sides, because it's not going to happen that Putin and Zelensky walk into one room and they sign something, or they talk it over and they agree over something and they sign it. First, there needs to be a deal. Deal needs to be lying on the table, which the parties agreed to, and then they're going to walk in and sign. And in those conditions, I think Vladimir Putin would be okay to even sit in one room with Vladimir Zelensky, which he was not very willing to do, as we've seen throughout negotiations. And on that, it's quite unclear if they are going to reach, even if these preparations that I talked about are done, if they are going to reach some sort of the deal, even if the land swap, for example, is not on the table, there are other arrangements, because the problem still remains with Ukraine agreeing not to join NATO, to give up its bid for joining NATO, European Union, and Russia is still insists on the security guarantees which the United States proposed to become such a guarantor, but it's not clear if Ukraine is at the point that it's ready to accept or negotiate on something that Vladimir Putin would accept as well.
Right. And Julia, you believe, I want to turn to the Middle East, because you believe actually what we're seeing in the Middle East when it comes to Israel and Trump's relations with Israel can be put similarly to how we're seeing the Trump administration dealing with another geopolitical crisis with Ukraine and Russia. Can you talk about where you see the overlaps?
The overlap in my mind is that Trump, it was a part of Trump's promises during his election campaign to end up all the wars and move on to the issues of more importance, probably making America great again, to the domestic issues. So he is quite impatient to end those conflicts, both in Ukraine and in the Middle East, to have some sort of settlement. Of course, not with Israel losing in the Middle East, but nevertheless to put a cap on that fire, on that conflict that is happening now around Palestine. And the overlap is also that he was unable to do that, because he promised to end the war with Ukraine within, 24 hours. That didn't happen. So now he wants that win desperately, to be able to declare that he either got that win, he put an end to both conflicts, or at least he's done everything he could for that, and it wasn't up to him. It was up to Vladimir Zelensky, Vladimir Putin, Benjamin Netanyahu, and the Palestinian administration, and whatever. Also, the overlap here might be in the sense that Netanyahu also is inflexible, in the sense that there is a deal on the table once again on the ceasefire, as we know, right? And Hamas, as of lately, agreed to the deal, but there is no indication that Israel is going to agree to the deal, because Netanyahu administration, I guess, prefers to keep fighting until the victorious end, rather have a ceasefire, have again half of the hostages released, and then after a while they will have to renew that. So for Netanyahu, kind of the way it is for Vladimir Putin here is it's everything or nothing. Either we are getting it all, some kind of end settlements, which probably would also imply expelling people from Gaza elsewhere. That's what's being negotiated with other countries. So far, I don't see anybody accepting that. Or we will simply keep fighting, and I don't think hostages in this situation matter that much to Netanyahu administration and his minority government.
Right, and that could all come to a head at the UN next month if we do, in fact, see other nations recognizing the Palestinian state, as we mentioned. Julia, we do have to leave it there, but really appreciate you joining us. That's Julia Roknifard from Taylor's University, Malaysia. Thanks so much. And Israel's Prime Minister Benjamin Netanyahu's cabinet has approved an increase to this year's state budget to cover additional spending on the war with Iran and fighting in Gaza. The finance ministry says the overall 2025 budget will be raised by more than 30 billion shekels, with the lion's share allocated to defense. The target budget deficit will be raised to 5.2% of GDP from the current 4.9%. State revenues this year are seen exceeding expectations, helping to minimize the impact of additional military spending. Now, coming up, new research points to Trump's tariffs fueling a global trade realignment, with China deepening its reach into the global south. The details on that next. This is Bloomberg. Trump's tariffs are reshaping the global trade map. According to research by S&P Global, tariffs are pushing China closer to the global south. For more on what that shift actually means, let's bring in Bloomberg's Jill Desis for more. So, Jill, what are some of the trends that we've been seeing and that S&P actually highlighted?
Well, Jen, what this report is ultimately showing us is it's really quantifying something. What S&P is doing is really quantifying something that we have observed trends with for years, which is that the places in which China is exporting goods, the places in which it's investing are really closer to the global south. So it's over the past decade, China's goods exports have doubled to nations mostly across Southeast Asia, Latin America, the Middle East. This is compared to growth of about 28% to the U.S. and then 58% to Western Europe. So you really are seeing, I think, that really, really big focus from China on places in the global south where it sees that it can expand its reach. And obviously, this is incredibly important, particularly in light of these tariffs. I mean, this isn't, again, just an incredibly recent trend. What S&P is really looking at here is something that extends since Trump's first term. And that's really, where we did, sort of see that shift, in the U.S., certainly in the form of sanctions and tariffs on China. And so, yeah, I mean, when it comes to China, they're really just looking at pivoting and trying to find those growth areas in the global south.
And we do know, of course, even here, China has been coming increasingly closer to a number of African nations, even from where it was already. How is it affecting the Chinese economy?
Well, look, I think, Jen, when you look at how the Chinese economy has evolved over the last several years, obviously in the middle of this economic slowdown, there's a lot of concerns within China about how exactly you sort of support some of those important pillars of economic growth. Trade is certainly one of those. We've seen, something of some pressures on U.S.-China trade. And so China, necessarily is sort of looking at other avenues in which it can increase trade. Africa is certainly one of those places. I'd also point out, of course, even more than that when it comes to Africa, you look at things like the Belt and Road Initiative and forms of investment. I think that's, clearly, important for China when it comes to growth and expansion. Again, what Xi Jinping is ultimately doing here is really trying to build those inroads. We've certainly, again, seen that in Africa. We've also seen him take additional meetings with leaders in Southeast Asia this year, Latin America. I mean, again, really kind of showing that, for China, when it's looking to sort of shore up its domestic economy, try to expand its global reach, it really does come down to expanding those relationships outside of the United States and Europe.
Yeah, thanks so much. Bloomberg's Jill Desis there for that report from S&P Global. Jill, thanks so much for joining us. And now coming up, we'll get the latest in the EV space as Xiaomi looks to take on Tesla and BYD in Europe. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Xiaomi is looking to sell its first electric vehicle in Europe by 2027 in a bid to take on Tesla and BYD globally after gaining traction with its year-old Chinese EV business. Transport reporter Danny Lee is joining us now from Hong Kong. So, Danny, thanks so much for being here. Talk to us exactly about what Xiaomi had to say about its expansion plans, especially considering some of the other competitors out there.
Yeah, Xiaomi is relatively recent to the EV business, primarily a maker of smartphones and household devices, but its push into EVs has been relatively successful in China, and so it's now looking at pushing that success into places such as Europe. I'm sure the Middle East may be not too far off here, and the ability to have a small but very successful line of popular EVs and ones which are really affordable and have pretty decent tech under the hood, it has really captured the imagination of the Chinese consumer. And by being able to go into somewhere like Europe by 2027, it's going to be able to compete with Tesla in particular and other Chinese competitors who've gone into the likes of Europe and further afield in order to try and really shake up that competition a little bit more. And so it's going to be quite exciting to see how it can deliver on what it's done in China and how that will translate in other parts, whether it be the Middle East or whether it be in the likes of Europe.
And you mentioned Tesla there. Are we seeing Tesla at least trying to fight back some of this competition that we're seeing from China?
Yeah, absolutely. And so Tesla broadly has been under pressure with sales being on the wane, sliding in various parts of the world. In China, it's just put out a new model, pricing on that as well. This Tesla Model Y, a 6-seater version, so slightly longer than the normal range. And so it's actually pricing it in a way to perfection in the Chinese market, where it's relatively identical to some of those Chinese rivals. And so therefore, by doing so, hopefully it can spur some of those sales that it has lost to some of those Chinese rivals. And really, it hopefully gives it a bit of an uplift, given China has been a bit of a weak spot for them, and it's still waiting for another catalyst to really drive home sales. Everyone's been talking about this driver assistance system that it's been pioneering. Still waiting for the Chinese authorities to get approval for that. And once it does, it may well really lift sales. But for now, it's got an interim measure in order to try and capture some of that attention.
Very fascinating competition wars there in the EV space. Bloomberg's transport reporter Danny Lee in Hong Kong for us. Danny, thanks so much for that update there. And let's just take a quick check at markets right now. Futures looking a bit red on the screen right now, risk-off day. And a lot of that, as we were speaking about earlier, potentially coming from the pullback that we did see on Tuesday from a number of tech heavyweights, including Nvidia. But it's looking like the Euro Stock 50 futures looking to start the day weaker as well. But that's where we leave it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.